Good evening traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen, euro dollar and Bitcoin. So to start off this week on the US dollar index, I want to talk very quick about NFP. Now NFP had really poor numbers to it, to be quite honest. And what we see here, we've got an inside bar forming at the top of this range again. You could say it's also rejecting the daily 50 as it closes below it. And the volume here, just a little tip higher, it does actually show there was a bit of interest here as well. So personally myself, I think for the next few days we will move back down again. It looks as though this trend line will be the key area where we're going to be stopping again. So you got 3 touches there. So this rounded area here will be where my next target to short the dollar would be. And there's a couple of trades we can look at trading against the dollar quite nicely. So obviously I'm not going to go through the weekly chart of this as we've been through it every single week so far. So on the Aussie dollar, there is many different lines I've drawn across this purely because it depends exactly what you're looking at, and I've got multiple different charts here for this. This is my Aranda chart. If I just flick you over to my IDC chart, the data is a bit more information there. I've got something like this here. This key level here at 775 can also be 77. It's a little zone there. It's not really too much of a shocker there. What I see now though, I do see this chart just moving up. The reason why, we ran out of steam to the downside we have. The volume here now is clearly picking up nicely. So I do think for the next couple of days we will see some movement to the upside in Aussie dollar. Now I've already, myself personally, I've already entered a position already on this, but let me explain what I'm seeing here. There we are. So, and what I've got here pretty much is a falling wedge pattern here. We broke out to the upside. We've now come back down again. It seems to be struggling to come down any lower. I know we are testing the 4-hour 50 at the moment. A little bit of volume there as well. But my sentiment of the dollar itself is pretty weak, and I think this will just move up just to at least the recent highs. It might get to around this area here, 775 area where my cursor is now. So I think that would be my ideal trade for that one, my limit on that one. So that's what I'm looking for the moment. But the lower time frames is confirming the higher time frames in respect to the fact that we are struggling to head any lower now, and this is now putting in some higher lows in higher highs at the moment. So the intraday is kind of confirming the higher time frames. And obviously if you look at the weekly chart now as well, we've got lots of little dojis here, lots of deceleration. So for me personally, the move to upside would not shock me at all in this pair. Now, if I now head back to euro dollar, now it's kind of slightly different way around. What I also see here as well, a very similar story. Notice how this upward sloping trend line here is now coming to play on the daily chart, where you've got these two kind of candles here with nice high volume on the bullish side here. So I do think a euro dollar move up would be likely now over the next few days as well. And again, if I just flick you over to that on my intraday charts, the 4-hour at the moment, clearly the 4-hour doesn't present that information yet, but a break above the 4-hour 50, come back to test it, then head back up higher would not surprise me at all this time round. But I'd need to wait for that to actually happen, or we pull back down, respect 122.6, put a little mini inverse head and shoulder pattern in. So I'll show you what I mean by that. So we get something like this, like that. So it means it respects the 4-hour 50, comes back down, and then we break up to the upside just a little bit further up. I mean, to be quite honest, it depends whether this could also go back to 1.25 again. I'm not sure if it will do. We're getting quite close now to this dollar breakout at the moment, so it's kind of sit tight and see what happens. But I do honestly see something happening that way. And again, if you look at the weekly chart now as well, you're not moving anywhere at all in this little range. So, like I said, a little in and out trade there is also quite possible. Now, pound yen. For me, pound yen has presented many different scenarios here, and it's still quite strange. So, what we've got at the moment, we've got this move upwards. We are still in a bull trend at the moment, but we had this like rising wedge which has been squeezed to the downside. We broke out to the downside, sorry, with decent volume as well. we've messed around, and now the move back up on the weekly chart, the volume is getting lower and lower and lower, but these candles getting bigger and bigger and bigger. That does not make no sense. That does not actually represent the market being true to itself. So personally myself, I do still think a move downwards would be happening on a weekly perspective at the moment, but just not right now though. So right now what we've got at the moment, we've got this 152 I think will be where price could go to next, but it's going to struggle to get there personally because of the way the volume is at the moment. We're picking up volume here as well. This candle here it's a doji candle as such, but it's got quite high volume, especially over the recent couple of weeks. So I'm expecting it to move decently, and it hasn't. So that says to me that something is slowing it down. So when we come down to the intraday time frames and the 4-hour chart, I've obviously got 1.52 lined at the key level here, but it had broke above 150.5. So for me personally, you're going to chop in and out of this level, and the fact that it's a key level, there's quite a lot of volume here as well in the past. I'm not very happy with taking this trade, because if you take entry here, for example, where would you put your stop? Okay, well below the trend line makes sense, but below the 149 level is clearly going to be the way where the key level is. But if you do that, you're not going to get anything more than 1-to-1. This way you just place an order and you get something like that. I mean, that's not a very good trade, because you're trading again through another key level, 150.5. So for me personally, up and down trade, short and long, doesn't make no sense. Taking a short from 152 though does make sense. If you've got something like this, and you get the actual a nice reversal candle, you could aim for a 1.2% trade there. If it breaks the trend line and comes back to retest again, you could get a much higher percentage risk to reward trade there. But at the moment, for me, I don't like the way the weekly is. I don't like the way, although this is an upward trend, you're at a level now where if you break through it, you then got to break through it again. You can't put your stop anywhere decent and safe. And if it does break down that far, it means you're completely wrong. So for me personally, this is a trade where I wouldn't want to be in too much. Like I said, 152 really is the best short position. Whether this is a higher low on the weekly perspective, it still remains to be seen. But like I said, these candles here does not give me any confidence whatsoever to take this long, purely because the lower volume and the way the candle's getting bigger does represent a weak market in this direction. So now Bitcoin. So Bitcoin, I think at the moment you're going to we're in a bull trap, what I call them. So it'll make people think, hey look, here's the inside bar, deceleration, fantastic, let's look for some long positions here. And the problem you have here is just a low volume bargain. So this is just market breathing. The way it's going down is breathing nicely. So bearish engulfing candle, higher volume. The smaller bearish engulfing candle, slightly lower volume. Small bullish candle, low volume again. Bearish engulfing candle, high volume, and now doji, small volume. So this whole move down over the last 5-6 weeks is completely valid in what it's done. So that means that we are in an actual bear trend there quite nicely. And if you notice here now as well, the volume to go up to the upside, the same as my fear of pound yen on the weekly chart is happening on the daily chart. The volume's just dropping off, but the candle's getting bigger and bigger. That doesn't make no sense. That really does not make any sense at all. And personally myself, I would not want to be involved in this pair whatsoever to the long side. So if I now just pop down to the intraday time frame, last week I did say I thought the market would come back down again, and it has done so. And what I want again to highlight here, just to show what I mean, these candles, it's going up, the volume is just nothing, there's no volume at all. This explosion of bullishness should be with volume as well. There's nothing whatsoever there. So me personally, I think again we'll come back down again, we are to test this this kind of region here around about 6.6 area. And personally myself, I still think we're going to break down unless we get some decent high volume and rejections of this 6350 area. Until that point, I'm not going to turn that bullish. If you look at the longer term time as well, I just don't see this breaking out just at the moment. So again, it's wait and see. But if you get a break and retest of this 635 area, definitely I'd be interested to short it. To go long, you need some good strong volume, break up to around about 9.5, then come back down to test 8,300, 8,000 area with decent volume, and then we should rocket off afterwards. But if that doesn't happen, I'm still more biased to the short side. Okay guys, thank you very much. Any questions, give me a shout. Take care.